Hey, good morning, everyone. Morning. Hope you're all doing well. Give me 1 second here. It is Monday, November 6th. Let me know if you can hear me, if the audio is good, and we'll get this started. Last week we had a pretty interesting upside momentum move, realistically. We're going to talk a bit more about that, right? The potential of the move and a few more other things. Obviously, we'll be breaking down some of the expected movement here on the overall session and what we could be presented with this week. So keep around for that. By the end of today's session, or this update, I'll talk about trade plans and levels. Thank you, Lucas Triple B, for the audio, and let's dive right into this. So November 6th, Monday. What we had in news overnight was something pretty interesting, right? South Korea is actually prohibiting stock short selling until June 2024, right? I thought it was January at first glance. Now, January, okay, like 2 months, whatever. June 2024, in a move to trigger a big rally for equities at increasing trading volume. The benchmark KOSPI and tech-heavy KOSDAQ soared 5.7 and 7.3% respectively, resulting in both indexes, whatever, closing out their best session since late March 2020. Short selling is an investment strategy, naturally, where traders and hedge funds, whoever they are, investors, they sell borrowed shares with the aim of buying them back at a lower price at a later date. So it's a risky and costly strategy that requires a margin account and collateral with the potential for unlimited losses. Stock prices theoretically can rise infinitely. So the South Korean measure is aimed at fundamentally easing the tilted playing field between institutional and retail investors. Financial Services Commission Chairman Kim Joo-hyun said at a news briefing, amid continued uncertainty in financial markets, major foreign investment banks have been engaged as a matter of practice in unfair trades. And we determined that it would be possible or impossible to maintain fair trading discipline, and the regulator added that it will also implement a zero tolerance approach to illegal practices in naked short selling, with a special investigation team to establish and perpetrators facing criminal prosecutions. So, to note, South Korea had already banned short selling during the coronavirus pandemic, and the ban was lifted May 2021 for trades of companies on the KOSPI and KOSDAQ with large market caps. But the restrictions have remained in place for more than 2,000 equities. It comes as a vocal group of retail investors that continue to complain about the impact of shorting influencing public perceptions ahead of general elections for National Embassy in April. However, according to the exchange data, short selling in South Korea only accounts for a fraction of the market, about 0.6% of the KOSPI and 1.6% of the KOSDAQ. So over in the US, the SEC has issued controversial bans of short selling certain securities before, as we've seen, covering hundreds of financial equities during the financial crisis of 2008, and it was again discussed during the banking crisis earlier this year. Many have cited that the regulatory intervention was needed at times to protect companies and stabilize the market, which could have real-world effects like spooking depositors or prompting bank runs. So others have also argued that the restrictions were not only unnecessary, but actually harmed market quality, stability, and discovery. In turn, those could impact liquidity and pricing efficiencies, while short sellers may use other instruments like futures and options and swaps to get around the bans. So theoretically, right, the ban of shorting the overall equity markets, right, is kind of counterintuitive in the free market spirit of the overall market, right? Allowing for markets to ebb and flow as they would based on news, inefficiency, so on and so forth. So naturally, if we would see a short selling ban in the US, we'd get this massive rally, right? Impeccable rally, because the standard of short selling in the US versus South Korea is probably very, very different. Now, I don't necessarily agree with this ban, but it's very interesting to see that it goes through June 2024. I think saving saving certain companies from bankruptcy and actually explosion. Yes, okay, in some cases can harm the overall economy. Like if the banks actually took a turn for the worse, right? If the larger banks took a turn for the worse in the U.S., right, you could have these massive, massive liquidity crunches that could really shake things up. But at the end of the day, that is what a general free market looks like, right? Everyone, big corporations, they get bailed out for playing with fire while the individual investor keeps getting beat up. So just a little thought on that. We haven't necessarily seen that this South Korean short selling ban has trickled any kind in the US. But another thing in the US, right, investors are watching one of the best and biggest investors ever, Warren Buffett's performance over the weekend, as Berkshire Hathaway reported a 41% year-over-year jump in Q3 operating earnings. The results were driven by strong numbers in its insurance divisions, which were partially offset by profit declines in utilities, energy, and railroad businesses. Berkshire Hathaway has actually compiled a massive cash pile, which also grew to a record of $157 billion, prompting some acquisition speculations. So we've seen that many analysts, like everyone, and myself included, were surprised by Buffett's decision to slow down on the stock buybacks, but said that he continues to favor investment in treasury over equities, right? About 78% of Berkshire's $318 billion of equity holdings at fair value were concentrated in American Express, Apple, Bank of America, Coca-Cola, Chevron. So very interesting indeed, as I've been looking at treasuries over the last 2 weeks to see that I think opportunity in the first half of 2024, right? Something that I think people should take a larger glance into, considering yields pulling back and that potential slight little rally before we start to see another downside move in the bond market. So to start off the week, let's see what we have. These are three different volume profiles based on timeframes. The most right is the monthly. The one in the middle is the weekly, and then we have the daily. So the monthly profile here, right, suggests that there are a lot of low volume areas where prices have run into. Now, I understand there's only, including today, there's only been 4 trading days for the month, but we've seen that from the lows to the highs of the month, we've rallied approximately 200 points, right? Excuse me, in a matter of 3 days alone. So this spells a lot of, I would say, imbalance currently in the market. I think a little greed has entered. So this week, at the beginning of this week, I am looking to see if prices can pull down slightly to clean up some of the auctions lower before we get that expected higher low to continue into the end of this month, right? So I could see a little more upside momentum before we see a pullback in December at some point. But this week, I'd like to see pullbacks to clean up some of this auction on the monthly, right down into this 4,340 area, right, plus or minus a few handles to clean this up. And then ultimately, I don't want to see prices below 4260 area. Mid 4280s and 4300 area provides a key support. So I want to see if we can get some kind of pull down. Immediate support is at 43.60 to 65 on the equity futures. But we start selling under these 70s, these 60s, I can see another 20-point drop before some bids do step in. So I don't want to necessarily start selling every rally, right? I'm not trying to fade this thing. It's a monster move to the upside. But there is a lot of resistance at 43.90 to 95 as the first start of a prior distribution that runs up into about 44.10, 12, and then we could see that 20.25. So as long as we remain under this like low 90, I could see them attempt some pushes lower before we can get a pickup on the upside. But I think we're due for some kind of profit taking, clean up some of these auctions and gaps before we can get that leg higher. Right now, naturally, if we just start bidding off of the open, it is what it is, and we can get behind that. But as it stands right now, I am looking for minor pullbacks, but still technically bullish on the medium term. So let's keep that in mind.